David Stryzewski is with me. Right, consumers are spending. Why do you think that spending power is not sustainable?
Well, good morning, Stuart. Great to be with you here. The consumers have been spending for sure, and we know that 70% of our economy is based on how the consumer has been spending. The big difference right now is that we are looking at 1/3 have not saved anything in their in their savings emergency funds here year to date. And we're looking at credit card expenses right now surging in ways that we've never seen before. I mean, if you look pre-pandemic right now, we're looking at 50% more in spending right now in these specific credit cards. And if you're paying the high APRs and you're just, paying minimums on those credit cards, you're going backwards really quickly.
Well, do you think we're heading for recession? Do you think we're heading for recession if the consumer pulls back?
Absolutely. I mean, how can we sustain if 70% of our economic growth is based upon the consumer? So we're looking at real GDP versus nominal GDP. And ultimately, what we're doing here today is we're just spending a lot more on the price of everything. We're not necessarily, selling more units. And so corporations have the ability to, kind of hide some of that data within their numbers here when we look at real versus nominal on the GDP side. But, ultimately, the consumer today is spending in a way similar to Congress. This does not balance. I would not try this at home.
Would you buy any stocks at all right now?
Oh, yeah, absolutely. There are definitely positions worth looking at. I mean, if you look at oil as an example, as we get into, different situations like this in a geopolitical way, if they reduce production, but the value of oil still remains high, I mean, I'm pretty confident that, these companies are going to cut their kidneys out before they cut dividends. They're going to continue to at least pay you for holding on. What does price ultimately do? I don't know. Over time, it goes up. Ultimately, the metal miners as well, relative to the S&P 500 PE ratios, metal miners are very, very low and on sale, at least based on my assessment here.
All right, metal miners and oil and not much else. David, thanks for joining us. See you again real soon. Looking at the,
Yes,
on the left-hand side